All right, so in this video, we're going to finish our discussion on income taxes. Notice here it says most people pay part or all their tax bill during the year. If you're employed, your employer deducts federal taxes through withholdings. So withholdings, that's what they call them, based on a percentage of your gross pay. If you are self-employed, you pay your tax bill through quarterly estimated taxes, so 4 times a year. When you file your tax return, all you are doing is settling up with the IRS over the amount of taxes you paid during the year versus the federal income tax that you owe. When you get a tax refund, this just means you overpaid the IRS and they're returning your overpayment to you. Sometimes people will get like $2,000 back and they're like, yeah, and of course we love that. But if you think about it, you could have had that $2,000 throughout the year and you could have maybe even been earning interest on it. So normally you want to try to be as close to zero as you can. Of course, it's better to have a refund than to owe, but keep that in mind. In addition to income tax, we're required to pay the federal government what are called FICA taxes that are used for Social Security and medical benefits. FICA stands for Federal Insurance Contributions Act. Now, Social Security provides payments to eligible retirees. Mostly it's for people that are retired, but also people with health problems, eligible dependents of deceased persons, and disabled citizens. So for example, when my father died when I was very young, my mom was getting payments from Social Security for 3 children. But for most people, they're not going to see that money until they're retired and they're collecting Social Security. Medicare provides health care coverage mostly to Americans 65 and older. The employees' rates are 7.65% on the first $160,200 for 2023. And you can read the rest here. Most of us are going to pay that 7.65%. Most of us aren't going to be earning more than $160,200 a year, but you can look at the details there if you're interested for people that pay more or that earn more. FICA taxes are generally based on your gross wages. So it's basically the money that you earn from your employer. Now, there's an adjustment there. There can be based on retirement stuff that you pay through your company, but for the most part, it's based on your wages, what you make at your job. All right, so the next thing I want to talk about are what we call marginal tax rates. We sometimes call these, well, first of all, let me just say this. We have what's called a progressive tax system. So people who make more money are going to pay higher rates of taxes, higher percentage amounts. So when we talk about marginal tax rates, sometimes people call these tax brackets. And so let me show you how this works. I'm going to use, well, we'll get to that in a second. Let's just go ahead and look at what we have here. So notice someone that's single, up to the first $9,950 that they make, they're paying 10%. Now anything over that, up to $40,525 is taxed at 12%. And then anything over $40,525 is taxed at 22% up to $86,375. So it just progressively goes higher. So let's see how this works. So in example 3, it says use the table above to complete the tax, oops, I forgot my L there, didn't I? To complete the tax owed by the following. So a single man with a taxable income of $45,000. So we're in the first column here. So basically, I'm going to use buckets to represent what we're doing here. So first of all, we've got the 10% bucket. And so if he's made $45,000, $9,950 of that is going to be paid at 10%. He's going to have to pay a 10% tax. So take 10% of 9,950, that's $995. And so that's what he's going to pay for that first $9,950. Now let's move to the next rate, which is 12%. Now keep in mind, he's made more than $40,525, and so he's going to be going into the next bucket here, or the next rate, tax rate. But basically, so basically from $9,951 to $40,525, he's paying 12%. So basically, we can take $40,525, that's the total that you can make, and only have to pay 12%, minus the $9,950 that we were already taxed on. So in this bucket, we're going to be taxed on, let's see, I'm getting $30,575. So if you take 12% of $30,575, you get $3,669. So he owes $995 plus $3,669. Now we have a little bit more, because remember, he made $45,000, and this only goes up to $40,525. So he is going to have to pay some money at the next tax rate, which is 22%. We're moving on to the next bracket. All right, so now basically we can take the $45,000 that he earned minus, he's already paid taxes for, let's see, $40,525. So minus $40,525. In fact, if you add this number and this number here, you can see that is the $40,525. Remember, that's what you're paying total in these first two groups or buckets. So here, if you subtract that, you're going to get $4,475. And so that's what we're going to be paying 22% on. So 0.22 times that amount, and you get $984.50. So if you add all those numbers up, you'll see that he owes $5,648.50 for taxes. So that's how they determine it, using marginal tax rates. Okay, so I would encourage you to try B now. And in this one, you're actually going to only use the first two buckets, because notice they earn $18,000. And so you're only going to get as far as here, because this is for up to $40,525. So go ahead and do that one, and then you can check your answer. So let's go ahead and look at this. So the first $9,950 is taxed at 10%. And so that's $995. And then in the next bucket, the 12% bucket, well, you're going to have to take 18,000 minus the 9,950, so 18,000, that's what he earned, minus, we already paid taxes on 9,950, and that's equal to $8,050. So if you take 12% of that, 0.12 times 8050, you should get 966. And so for the first $9,950, he's paying $995 in tax. For the remaining amount, which is $8,050, he's paying 12%, which is $966, for a total of $1,961. However, notice he's got a hefty tax credit. I don't know why. But basically, we could subtract. So this is actually a negative, right? This is what you owe. A tax credit is a positive. So if you add these numbers, you'll be in the positive 1,539. And so this is actually going to be what's refunded to you. You have a tax refund because of that tax credit. So you can see how a nice big tax credit like that can really make a difference. Like, I'll give you another example where you might get a tax credit, like maybe on your house you put some solar panels on it, and there's certain government tax credits that you can get for stuff like that. Anyway, let's move on. We're just about done here. We got one more page, one more problem to do. So in example 4, it says you decide to work part-time at a local veterinary hospital. The job pays $15 per hour and you work 20 hours per week. Your employer withholds 10% of your gross pay for federal taxes. Remember, that was the lowest bucket or the lowest bracket. 7.65% for FICA taxes. That's Medicare and Social Security, mostly Social Security. And 5% for state taxes. So notice this is not Texas. What's your weekly gross pay? Well, you're working $15, or you're getting $15 an hour for 20 hours a week. So you're going to multiply those two, and you get 300. So your gross pay is $300. That's before they take out any money. Of course, they're going to take out 10% for federal taxes. So 10% would be 0.10 times 300. So basically 10% of 300 is what we're finding here. And that's 30 bucks. So for your FICA taxes, you're going to pay 0.0765, so 7.65% written as a decimal times 300, and you get $22.95. And finally, for state taxes, you're paying 5%, so 0.05 of your 300 bucks. And if you multiply that out, you get $15. So basically, let's go ahead and add all those up. And let's see, I don't even know if I did that. I don't think I did, so let me do that real quick. So we've got 30 plus 22.95 plus 15, and so that's a total of $67.95 that's going to be taken out of your check for these taxes. So $300. Now your net pay is what's left over after the taxes are taken out. So that's $300 minus the $67.95. And so you should get $232.05. And normally at this point, when somebody gets their first paycheck, they're like, man, they're not liking this tax thing much because they earned 300 bucks and they're only getting $232.05. So I want you to notice something here. We'll do that last part in just a second. Your annual pay here, that's how much you're getting per year. Well, there's 52 weeks. If you work all 52 weeks, multiply 52 times 300, you get $15,600. Now keep in mind, the standard deduction, at least for I think it was 2022, I think we were using 12,550. 12,550 is the standard deduction. So if you subtract that from what you have here, you can see that you're actually going to be paying a pretty small amount in taxes. So this person, if they're taking 10% out each paycheck, this person's going to end up getting a refund because you're only going to be taxed on a little over $3,000. All right, let's finish that last. Oh, and I want to mention one more thing. Notice your gross pay for the year is $15,600. If you look at what you're actually getting, it's $232.05. If you multiply that out times 52, what you're actually bringing home is $12,066.60. So notice you've paid over $3,000 in taxes for the year. So that's definitely a chunk of change. So last thing here, what percentage of your gross pay is withheld for taxes? Round to the nearest 1/10%. Well, we could really, there's two ways we could do this. We can just add up all the percents. We got 10%, 7.65%, and 5%. If you add all those up, that's 22.65%. They want you to round to the nearest 1/10%, so you got to stop here. So it'll be 22.7%. Now the other way you could have done it is, remember we found out the total deduction or amount deducted was $67.95. If you divide that by your earnings, which was $300, you do get 0.2265, and so you end up with the same answer here. You can do it either way. All right, well that's it for this video. I hope that helps. If you have any questions, let me know.